And Nigerian banks are rebounding from a record discount to lenders in South Africa as growth prospects for the continent's two largest economies diverge. Joining us for more is Peter Mushangwe, Head of Research at Lachai Securities. Well, Peter, looking at that as by way of an introduction to our discussion, the interesting opportunities for investors in the banking sector in Africa, and as we said there, the prospects for Nigerian banks versus South African banks is one conversation. Let's just look, before we do the valuation and the opportunities, how do the sectors compare? We know the South African sector is well regulated, highly regulated. It was one of the sectors, one of the countries which was immune, or not immune, but really withstood most of the pressure from that global financial crisis because of good regulation and tight control of lending practices.
Yeah, that's true. There are different systems. Right, when you look at regulation in terms of Basel, they are different. I mean, local Basel 2.5 moving to Basel 3, and most of the sub-Saharan African systems, they're still around using Basel 1, Basel 2. So there are different systems, but also in terms of opportunities, they're different. Penetration is still, different. In Nigeria, penetration is quite low, especially on the retail side. Kenya, penetration is low, but in South Africa,
when you say penetration of the potential market?
Yeah, in terms of, we usually use the banking assets to GDP to sort of gauge how much, of the system is banked, how much of the economy is banked. So in that way, your GDP, your banking asset to GDP ratios for Kenya, for Nigeria, they're much lower than South Africa. I mean, in South Africa, it was over 100 at some point. You can also look at number of accounts, for example, number of retail accounts in the system. All of those things, they point to a higher penetration for the local market than for Kenya and Nigeria.
Let's look at the number of big players. In South Africa, we often talk of the big four, possibly the big five sometimes with Investec, and then there are obviously other banks as well. How does that landscape compare in Nigeria and Kenya? Do you have 3 or 4 big players who are very influential?
Yeah, you do, but for South Africa, it's probably a different scenario. I mean, here we have a very high concentration. So you have your top 4 banks having market shares of more than 80%. Of course, that's not the case in Nigeria and in Kenya, but there are also, big 4 or 5 banks that will command quite significant market shares. And in terms of investments, usually you see your investors playing those banks.
Yeah, it also has different banking practices. In South Africa, when the Reserve Bank changes the repo rate, all the banks immediately move exactly the same numbers. That doesn't happen in the other countries.
Yeah, it does not happen as quick, I think. It could be a result of differences in terms of how effective the monetary policy is. But also you look at the sub-Saharan African banks, ex-South Africa, the interest spread are quite huge. So whether the policy rate has moved, banks still have that opportunity to change their asset mixes and protect their net interest margins, which is not the case here. When you look especially at other things like your loan-to-deposit ratios, it limits banks, it limits the local banks in terms of how they can change the mix of their assets.
Well, where is the value to be found? If you want to get into the banking sector in Africa, the point has been made repeatedly that other countries outside South Africa are growing faster. Does it follow that their banking sectors are going to be good to be in?
Yeah, generally they should, because your wealth levels or your per capita income is quite an important factor in terms of banking assets, banking service demand. So you would expect those banks that are, those systems that are growing faster to have higher demand of the banking services. But in terms of valuations, or in terms of value, we find value in the Nigerian banking system. I think they're just coming from a period when there was quite significant systematic risks in the system. So your cost of equity or your required returns from investors was quite high. And we expect, as confidence sort of comes in, we expect all the cost of equity to come down. But also in terms of profitability, things have been improving. You look at regulation, things have been improving. So
also, are they settled down after that debt crisis where the governor of the Reserve Bank kicked out the heads of 8 banks and poured 620 billion naira into the lenders, creating a state-owned company? So has it settled after that?
Yeah, I think it does. I think it does. I think what was key was really to sort of make sure that the governance side of the banking system was in order. In our opinion, we think that there could still be issues here and there, just like in another system or just like in another firm. But I think the governance has improved quite significantly. And that's very important, I think, for banks. That's a very important aspect. So we see profitability coming through now. And then when you look on a longer term basis, you know, the whole stuff we're talking about, penetration will sort of rise, will sort of increase. You look at per capita income, you look at population. So all those factors are quite positive for the Nigerian banking system.
Also, piggybacking on particular trends in business investment. So, for example, retailers, but telecommunications is one area in Kenya where the M-Pesa phenomenon has made a huge impact on personal banking there. So banking, not just taking advantage of economic growth conditions, but piggybacking on particular industries.
Yeah, that's true. And I think in terms of technology, things have, you know, sort of moved quite quickly in Kenya. We see now, you know, other banks in Nigeria and even local, you know, trying to pick up on some of the technologies. So it has been quite a positive for the Kenyan banking system. But we think that for Kenya, the valuations are a bit stretched. We think that penetration on the retail side is increased quite significantly because of those, you know, technological advancement. But also in terms of NPLs, asset quality, we think that in the short term, there could be a bit of a problem.
Mm. Is it easy to invest in the Nigerian sector? Easy to get into the sector if you want to invest?
Yeah, we will still have liquidity problems, but I think over time these will play themselves out. So you're going to put in 10 million or $20 million, that's a significant amount of money to put in there. But we think that over time these things will play themselves out.
Well, thanks to Peter Mushangwe, who's Head of Research at Lachai Securities on the African banking sector.